Good morning, everyone, and welcome to the live session. Today is October 21st, 2025, and we're watching the gold market versus the US dollar in real time. I'm glad you're here to see how this session unfolded, a true example of patience, analysis, and discipline, as the market opened around 7:30 a.m. New York time. Gold was sitting near its record highs, around $4,347 per ounce from the previous day. But the momentum had already begun to shift. The dollar index was pushing higher, and gold started to show early signs of weakness. Right after the open, sellers stepped in. You could feel that tone changing, volume increased, and the candles started to print red one after another. That's where I decided to take my first short position. Anticipating that the market would continue this correction, first move worked beautifully. Gold slid down, and I secured a $2,400 profit on that first trade. And disciplined, no need to hold longer than the market allowed. After taking profit, I watched carefully. The price began to retrace a bit, a small pullback, but still within the broader downtrend. When gold touched back near the $4,300 zone, I saw an opportunity to sell again. This time, I opened two additional contracts, confident the sell-off wasn't over yet. The market climbed slightly, testing patience, but I stayed calm. I didn't close the position when it went a bit against me because the overall structure still showed weakness. The key was trust in the analysis, not emotion. Then the reversal kicked in, strong sellers came back. Momentum shifted, and gold started to break below its morning lows. This was the confirmation I'd been waiting for. I held my position. As the price continued to decline, gold reached a low near $4,115 per ounce, a massive move, over 5.5% down on the day. That's where I began planning my exit. Managing the open profit carefully. When the candles started showing signs of exhaustion, I decided to close the position. That exit booked a $7,500 gain on the second trade, added to the first one. The total for the day was about $9,900. Looking back, what made this session successful wasn't luck, it was strategy. I followed the market logic, a record high, dollar strength, profit-taking pressure, and I respected the chart. Every move was planned. This sell-off was a reminder. Markets move in cycles. After strong rallies, corrections come. The key is not to fight them, but to recognize when they're starting and position accordingly. Notice how price respected the structure. Each lower high confirmed continuation. And even though there were temporary pullbacks, the broader momentum stayed bearish. That's what professional traders learn to see, not the noise, but the structure behind it. As we close this session, I hope you take away a few lessons. Be patient. Trade what you see, not what you hope. Respect the levels. And above all, stay disciplined. If you enjoyed this breakdown, subscribe for more live sessions, educational commentary, and real examples of day trading the gold market. Thank you for being here. See you in the next session.